In this video, we are going to analyze the famous Ross's hook, so let's not waste time and get right to it. Being a breakout or trend follow setup, I will implement stop entries for both the short and long side. I remind you, for those who want to download the strategy can find it uploaded on my Telegram channel. Let's declare our variables and start writing the setups. The long part will be directional with the close greater than the close of the previous bar, and we will have 3 highs. The short part will mirror the short, so close smaller than the close of the previous bar, and 3 consecutive lows. We will then move on to entry. First, we will check that there are no open positions in the market, and that in today's session there have not already been entries. Then we will move on to check the long and short entries, and when they occur, we will enter the next bar at the high or low of the previous candle. As a last thing, the exits. For this system, we will use bar exits, i.e., exit from long or short position after a certain number of bars. Well, the strategy is ready now, we just need to test it. I have chosen 7 types of underlyings, all different from each other. US bond, Euro future, Bitcoin, S&P 500, soybean, gold and oil. Regarding the time frame, I chose for all 60 minutes, but nothing prohibits you to change it and your liking. We are going to optimize our bar outputs. For 60 minutes, I prefer a 10 to 100 bar output and optimize both the long and short side. With the optimization over, it's time to see the results. Crude oil with $240,000 net profit and a not bad year-to-year distribution. Bitcoin with almost $500,000 net profit. US bonds very bad. Euro future not bad, with a net profit of $120,000. S&P 500 with $130,000. Gold with $230,000 net profit. And finally, soybean with a profit of $100,000. Well, and now if we wanted to make a portfolio with these strategies, let's see what happens. After exporting all the performance of the strategies, I go and put them into the analysis tool that I use. First, we go to the comparator. Here we see the systems compared with each other with metrics and graphs. We see how the system on Bitcoin brings a much higher profit than the others, mainly due to the size of the contract. With this tool, I have a very broad view of all the systems and their metrics. I can compare and choose the best ones. Let's move to Strategy Pro Viewer, where we are going to analyze portfolio performance. First, I select all the strategies, and the tool does the rest. From the separate equity chart, you see the confirmation of what I said before. Bitcoin brings more profit on the portfolio, but also more loss. For the moment, we don't care, but we can later decide to exclude it or decrease the contracts directly from the tool. In the metrics, we see an excellent result with a net profit of $1.2 million, a drawdown of $117,000, and an average trade of $206 per trade. In the correlation section, I set monthly data, and from how you see the systems, a maximum correlation of 0.166 and a strong decorrelation with 0.22. From this graph, we see the distribution of profit and loss, with the apex of the bell curve located between 0 and 2,000 net profit. Next is a pie chart for net profit by systems and a series of graphs and data frames showing us monthly, annual, and weekly returns. Now let's move even further to the right for the Monte Carlo analysis. In this case, we analyze the whole portfolio by entering the strategies we are interested in. I launched 230 simulations, and from this Monte Carlo, it appears that our portfolio equity is quite profitable and above all robust, and the metrics return good results. As a last thing, I launch an equity simulation with 100 future trades. From the results, we see that again the portfolio performs well, going between the bottom 5th percentile and the top 95th percentile. I hope you enjoyed this video. I remind you that you can find the strategy on my Telegram group, link in description. If you want more content like this, click like and subscribe. We see you in the next video.